Well, good day, subscribers. Hope you guys are having a great day out there. As always, if you're new here, I am Jeremy, and over the course of this past weekend, I released a video on Financial Education 2, the most famous series on the main channel, actually, called 3 Stocks I'm Buying Now. I decided to just release it to give a little love to Financial Education 2. And if you saw that video, then you already know what the 3 stocks are that made the list. If you don't know, make sure you check it out after this video. But today, I thought I would do 3 stocks that almost made the list. These particular stocks came so close to making the list, and I thought since this was a rare month where there were 3 stocks that were so close to making that list, I thought we'd just kind of go through these 3 stocks. I would let you know about them and tell you a little bit about these companies as well. I know you guys love to hear my opinion on different stock names out there and whatnot, so I thought this was a great opportunity to talk about some more stocks. Hope you guys enjoy this as always. By the way, we are doing a giveaway on the Becoming Master of the Stock Market course. We're giving away 5 of those. The pinned comment down there is to enter the contest for your chance to win. We're going to do the giveaway actually on this upcoming Sunday, okay? So that'll be the pinned comment down there, all right? First stock up of the 3 is Nordstrom, all right? JWN. This one almost made 3 stocks I'm buying, August 2019 edition, okay? So Nordstrom is a company right now, about a $4.5 billion market cap on it, trailing P of 9.4, forward P of 8, price to sales ratio of 0.28. So from a valuation standpoint, a very low valued company, a type of stock that most value investors would look at and say, this is a good value invest, okay? And then you see this, what I'm about to show you, and it even takes it up to the next level, okay? Value investors love some dividend money. And this stock pays about a 5% dividend yield if you buy the stock here today, okay? Payout ratio under 50%, which is pretty low. I mean, it's rare you ever get to see a company that pays out like a 5% yield or more and yet has a payout ratio under 50%. It is super rare in the stock market. So when you can find those type of opportunities, sometimes it makes sense to take advantage of them, okay? If you don't know much about Nordstrom, basically they have a few different businesses, okay? 3 kind of main businesses. One, they have their department store business, which are very high-end stores. They sell very expensive things there, okay? Very expensive suits and pants and dresses and purses and all those sorts of things. Very high-end apparel, let's put it that way, all right? Then they have Nordstrom Rack, which essentially sells high-end apparel but at much cheaper prices, okay? Stuff that might be out of season, stuff that might be, you know, slightly out of style. You guys know how styles always change and those sorts of things. Or sometimes, you know, some of these suppliers just make too much inventory and they need to get rid of it. So Nordstrom Rack will gladly take on that inventory and go ahead and sell it for cheaper price, and you get a lot of huge designer names. It's a very high-end clothing for actually pretty cheap prices at Nordstrom Rack, okay? And then they also have their Trunk Club business, which is a big growth business for them, which is essentially a business where you have like a personal stylist online and they send you different clothing items and you can keep those clothing items, you can send them back, and the stylist is basically trying to figure out exactly like what type of clothes you would like or something like that, okay? So very interesting business model, very along the lines of Stitch Fix, but maybe a little bit of on the higher end, okay? If we look at the income statement of this company, I definitely like it, okay? It's a company that's grown the last 4 years, 14.4 billion, then 14.7 billion, then 15.4 billion, then 15.8 billion this past year. So I always love a company that is continuing to grow their revenue, grow their top line, okay? And you gotta think about it, it's a really tough mall environment. When you think about their main business, which is the department store business, mall traffic has been very weak, right? So to put up growth in that type of environment, it's not an easy thing to do, okay? If we look at their gross profit, also growing from 5.1 billion to 5.3 billion to 5.5 billion to 5.7 billion this past year. That's obviously a very positive trend to see as someone that's a value investor. And if you're investing in a stock like Nordstrom, you're really investing as a value play. This isn't really a stock that you expect to, you know, triple or quadruple over the next 3 to 5 years. This is just a stock you plan on making a lot of dividend money in, going ahead and taking that dividend money, reinvesting it into other stocks, and hopefully getting good gains on the stock over time, okay? And if we look at net income, so if we look at the past 4 years, there was 1 year they had a huge decrease in net income, but since that time, they have grown net income again and again and again. And so that's obviously a very positive thing. So when I kind of look at Nordstrom, I like the business overall. I like the business model. I love that 5% dividend yield. I love that payout ratio being under 50%. And I just look at this stock as probably a stock I should make good money in over time, and I should make, you know, good dividend money in essentially as well, which I'll reinvest into probably other stocks or maybe some more Nordstrom shares. We'll just have to see. And so that was one of the stocks stocks that almost made the top 3, okay? 3 stocks I'm buying now, August 2019. The second stock that almost made the list was Wynn Resorts. So some of you guys that have been on the channel a long time, you know my history of Wynn Resorts. It's been one of our best stocks we ever had. Back in the day, you know, if we go way back to the GoPro days, like Wynn Resorts, it was like everything we had was like in GoPro and Wynn Resorts. It was a bad time for me investing, but Wynn Resorts really came through, and that was a stock that just went crazy for us, okay? So Wynn Resorts, I'm looking at this company right now, trailing P of 16, forward P of 17, and if you look at those numbers, you're like, okay, you know, decent value for a company like Wynn, but that doesn't really show you the true worth of a company like Wynn Resorts, okay? So you got to think about Wynn Resorts. They have these massive properties, okay? Integrated resorts is what they're called, and these properties cost a ridiculous amount of money to build, okay? So something I like to think about is, what is the enterprise for a company like Wynn Resorts, okay? About $21 billion, $22 billion for the company, okay? That's the enterprise value, which is essentially the market cap, and then you go ahead and you add basically how much debt there is compared to how much cash, and Wynn has, you know, quite a bit of debt, so that's how you get an enterprise value that's quite a bit above where the market cap is. So $22 billion is really the truthful amount on what you're paying if you're buying the whole entire Wynn Resorts company, okay? So the way I like to think about this is let's just, you know, disregard the client relationships Wynn has. Let's disregard the brand that Wynn Resorts has, the customer service levels, all those sorts of things. Let's disregard all that for a moment, okay? And let's just think about how much would it cost if another company was trying to build, you know, pretty much look-alike properties in the respective places that Wynn has, okay? So in my estimation, if you were to build Wynn and Encore, those same exact properties, on the Las Vegas Strip here today, the cost of that would be around $7 billion, okay? That basically means the huge, beautiful towers, everything that's in those towers, all those sorts of things, cost would be around $7 billion, could approach $8 billion if you were to build that same exact project now and start that project here in 2019. It would probably take you 4 years, maybe 5 years to get the full project done. So maybe you're looking at a 2023 or 2024 opening. So about $7 billion could go all the way up to $8 billion, okay? If we think about Macau, and I'm just talking about the small Wynn property in Macau and the small Encore property in Macau, those properties, once again, this is assuming you could get the land in Macau, get the government to give you the gambling licenses and all those sorts of things, but you need a lot of connections. You need a lot of proven track records to even get those type of things. But let's say you got those things, okay? And you got all approval, you got the land and everything. I estimate that it would cost a minimum of $4 billion to build those properties here today, okay? Minimum $4 billion, probably a little closer to $5 billion if you're trying to basically build those exact same properties, okay? So we're adding up the numbers, okay? But all these numbers I'm showing you are a little more conservative. Wynn Palace, okay? Let's once again, this is in the Cotai part of Macau. Let's assume, once again, you got the land, you got the licenses, all those sorts of things. If you were to build Wynn Palace, same exact project, here today, you were starting here today, the final cost of that project would be somewhere around $5 billion roughly. When Wynn built it, it was about a $4.2 billion project roughly. If you were to start that project here today and finish it over the next few years, it'd be at least probably $5 billion to make that same exact property here today, okay? And then the Encore Boston Harbor, that project just opened, and that had a cost of $2.5 billion, maybe a little over $2.5 billion of total cost for that project. If you were to start that project here today and get the land, once again, the concessions and all those sorts of things, right? You're looking at least a $3 billion cost to build that same property, okay? So what we get to here is we get to a minimum of $19 billion, minimum $19 billion to build the same exact Wynn and Encore properties in Macau, Vegas, and Boston as the company has here today, okay? And when you think about it in that context, the company starts to seem a lot more undervalued because once again, we're just assuming just to build the physical properties on the Las Vegas Strip, Macau, and right outside of Boston, right? $19 billion to build a competitive product with those products, right? That's unbelievable because we're not talking about client relationships. We're not talking about all the customers who love the Wynn properties and Encore properties and all those sorts of things, okay? That's unbelievable. And once again, you're paying $22 billion for this company. It costs a minimum of $19 billion to just build those competitive properties, okay? So obviously that makes it look, you know, much more affordable, okay? Next thing I want to talk about is strengthening client relationships, okay? So there's a great video, an old little interview clip, about a 2-minute and 43-second interview clip here on YouTube. This clip was like posted 10 years ago. It was actually posted during the Great Recession. And from the Las Vegas Sun, they did a little interview with Steve Wynn, okay? And And what he talked about there was Encore room rates. And basically, to tell you kind of the gist of that 2-minute interview there, he was explaining that the Wynn and Encore properties are the highest of the highest end, whether you're talking about Macau, whether you're talking about Las Vegas, okay, on the Las Vegas Strip, or whether you're talking about now in Boston. They have the premier properties, the nicest properties, the properties that the people with the most amount of money are going to want to go stay at, okay? So during that little 2-minute interview clip, he basically explains that they kind of set the price, whatever market they're in, because they have the highest of the highest end properties. So let's say the economy gets weak. Let's say the average price for one of their rooms on a decent economy is like $300 a night, okay? And the economy weakens. Well, then they have to bring their prices down to maybe $250, $200, and everybody under them kind of sets their prices. Oh, Wynn's moved down to there. Well, obviously Wynn's going to fill the fastest because they have the nicest properties. They're known for that, and they have these huge client relationships, right? And so their properties would fill first, and then, after them, all of a sudden Bellagio has to fill, and Aria has to fill, and the Palazzo has to fill. And then after that, Treasure Island, MGM Grand, and so on and so forth till you get to the lowest of the lowest end properties. So that's the real huge benefit that a company like Wynn and Encore has, is they play at the top of the end in the markets they're in, and they can really dictate price for the entire rest of the market because they will always fill first, okay? So that's something very important, okay? Now, also, I love this company because they do pay a 3% dividend yield. So you got to ask yourself, okay, why did this stock not make the list? Knowing all those sorts of things, okay? And here's the thing, it's really hard for me to average up on positions. I love to average down on positions, but here's the thing, guys, we already own some Wynn shares, all right? We own 43 Wynn shares in the public account as of right now. That's available in my private stock group, all right? 43 shares, $115 cost basis. We're already up over 16% on those Wynn shares. It's hard for me to go ahead and pay a 16% premium from where I just started buying these shares at, a month ago or 2 months ago, okay? So honestly, that's probably the reason it didn't make the list. And when I look at it, the stock, even though we're up 16+% on it, even here, if you're looking at a long-term basis over the next 3, 5, 7 years, even here, the stock is still a deal, okay? So it's one of the few stocks I've ever held where I've actually contemplated averaging up on a position we're up double-digit percentage on. That just usually doesn't happen, but I've actually considered that with Wynn Resorts, okay? So those are the first two stocks, and now let's get into the third stock, which I know you guys love this one, okay? The third stock of the bunch that almost made the list is good old Tesla, okay? Tesla, market cap on this one of about $45 billion, and Tesla's a real simple one for me, okay? Tesla's real simple. And here's how I view Tesla, okay? So, by the way, if you don't know Tesla, like, where the heck have you been, okay? They sell electric vehicles. They have the Model S, their high-end luxury sedan. They have the Model 3, they're a more affordable electric vehicle. They have the Model X, their luxury SUV, that's all electric, and Model Y is coming, which is an all-electric, more affordable SUV, okay? So the one question you have to ask yourselves, okay, is what will the dominant electric vehicle and self-driving company be worth in 5 years, okay? I feel that Tesla is going to be the dominant electric vehicle maker in the world and the dominant player when it comes to self-driving vehicles over the next 5 years, okay? I think they have an unbelievable next 5 to 10 years in front of that company. Unbelievable growth is going to be in front of that company, in my personal opinion, just kind of where I look at it. So the question is, if I believe that, okay, then where do I think Tesla's valuation will likely go over the next 5 years, okay? Let's not even talk about 10 years from now. Let's just talk about 5 years. So in my opinion, minimum of $150 billion valuation on Tesla in 5 years. Based upon what I look at objectively in the market and how I see just Tesla has a huge lead in front of everybody when it comes to electric vehicles, electric vehicle branding, the factories they have when it comes to electric vehicles, building mass amounts of batteries, all those sorts of things. They have this massive lead over everybody else. And in self-driving, they're pretty much about a year away from having vehicles that can fully self-drive, and could probably do it much better than an actual like adult driver can, okay? So if I'm looking at all this, I'm saying to myself, okay, in 5 years, I can't see any way possible this company's not valued at $150 billion plus. Unless, okay, they give up their massive lead. I showed you guys this here. Atlanta Falcons in a couple Super Bowls ago, they had a 28-3 lead late in the third quarter. And the Falcons ended up giving up that lead, and the Patriots ended up pulling a miracle and actually winning that game, okay? So if I'm looking at Tesla, I say there's a slight possibility that a miracle can happen, and all these other companies can catch up, and all of a sudden over the next 5 years, all of a sudden Tesla can be like behind in the game, or right at the same same place where everybody else is at when it comes to electric vehicle technology and branding and self-driving, all those sorts of things, and they could somehow give up their massive lead. But if I look at this, I just don't see that happening. It would take a true miracle for Ford and GM and VW and BMW and all these different huge players. It would take a miracle for them to somehow catch up to where Tesla's at when it comes to their tech around electric vehicles, their branding in the space, self-driving vehicles, everywhere we're going over the next 5 years. It would take a miracle for all those players to catch up. So if I'm looking at this, there's a very low probability Tesla will actually lose that lead, although it is possible, and that's something you always have to account for when investing. Investing, as I always talk about with the students in my private stock group, everything in this game is risk versus reward. What's your risk going in? What's your potential reward on the flip side? Okay, if I'm looking at a stock like Tesla, the risk is they give up their massive lead, they somehow lose that over the next 5 years, and they just become like a commoditized like electric vehicle company. Okay, that is possible, but it's very unlikely. On the reward side, with a company like Tesla, you're getting a company that's way out in front of everybody when it comes to electric vehicle branding, when it comes to tech around electric vehicles, when it comes to production of mass electric vehicles. They're really the only company in the developed world that is producing mass amounts of electric vehicles. Self-driving, they're so far ahead of so many of their competitors. So if I look at this on a risk-reward standpoint, yeah, there's a risk that a miracle could happen, they give up their lead. But on the reward side, the side I feel is likely, okay, the side that I feel is like an 80 or 90% probability versus over here like a 10 or 20% probability, that's why I've put a lot of my chips to Tesla stock over the last 6 months, 9 months or so, because I just see lots of potential there. And I see a stock that just has massive, massive reward potential, okay? And those are 3 stocks that almost made 3 stocks I'm buying August 2019 edition. By the way, make sure you go check out that video on financial education too if you have not seen the 3 that actually made the list. Let me know what you guys think about these 3 stocks, and let me know if you like these 3 stocks better or the 3 stocks we talked about on the August 2019 edition on financial education too. I would love to hear your guys' opinion in that comment section. As always, thank you for watching and have a great day.